Mr. President, soon this Senate will take a historic vote that will impact every American. These votes do not come very often. The last was decades ago. And we all understand, I think, or at least most of us understand, how critical tax reform is. All of us in the Senate, on both sides of the aisle, are familiar with the burdens and the complexity and the lack of competitiveness associated with our current tax system. It is abundantly clear that this complexity, or antiquated corporate tax system, acts as a brake on our economy. It is equally clear that in recent years our economic growth rate, our gross domestic product, has been stuck at a historic low level of 1.9% or less. Now, there are many opinions as to why our economy has been so stagnant, causing American job loss, unemployment, and more reliance on government programs. And I want to underscore what the people of Kansas have told me repeatedly as to why, at least in part, this has happened. Small business owners, manufacturers, our community bankers, underlending institutions, individual workers, laid off or hanging on paycheck-to-paycheck workers, virtually everybody in rural America, farmers, ranchers, growers, every town hall meeting have told me the number one issue of concern is the crushing weight of federal regulation. Now, that was summed up by one Western Kansas rancher who said, "Pat, I feel ruled, not governed." But we are unwinding right now this regulatory overkill. Today, we are making government a partner, not a regulatory adversary. How on earth did we reach this sad state of affairs? Well, there are many factors. Administrative policy that seem to mimic or compare to the European monetary policy, government agendas, and central control. But with this tax bill, that can change, and it will change. If only we recognize and take this important opportunity, an opportunity that many members in this body have never had to truly make a difference. This time we can. Can America get back to a place to make history and to once again experience the power of the American dream? I am confident that we can. We have before us now a comprehensive plan to address these issues, cleaning up and modernizing the tax code to help generate more growth in our economy. The bill before the Senate does exactly that, providing meaningful tax relief for families, small businesses, farmers, and ranchers and growers. I am especially pleased with the rates and bracket structure the legislation would put into place on the individual side. We have done a good job pushing these rate reductions down to lower and middle income families. This would provide a net tax cut for families in Kansas of about $2,500 and over 10,000 new jobs. As many has pointed out today, we accomplished this by reducing individual tax rates, raising the standard deduction, and increasing the child credits in the tax code. Let's be clear. These are consensus bipartisan ideas and are proposals that many of my colleagues on the other side of the aisle have in the past, at least, not now, I know because of the legislative standoff we've been going through, but in the past regularly proposed and supported. Mr. President, let me also comment on concerns raised by some of my colleagues that we simply cannot afford this bill and that it will worsen the country's financial condition. In putting this bill together, we have used very modest economic growth estimates, below the historic post-World War II norm of 3%. In fact, the Congressional Budget Office is currently projecting 1.9% growth over the next 10 years. And we learned today that the Joint Committee on Taxation says the Senate bill will create only modest economic growth. Now, notwithstanding the fact that I have never seen a CBO or joint tax projection that has been really accurate, I think these estimates are far too low, hard to believe, simply unacceptable. I refuse to accept that we cannot return to a more robust economic growth. And I think we will achieve better growth rates and observe that we are well on our way. Recent economic activity bears this out. The economy is now growing at a solid pace with low unemployment and low inflation. Real GDP growth during the first 2 quarters of the year averaged 2.1% at an annual rate, and since January, the unemployment rate fell 0.6 percentage points to 4.2% in September. That's the lowest rate in about 16 years. And overall growth is poised to average about 3% over the second half of this year. 3% in the second half of this year. Well, these are positive trends. But my colleagues, we can do more. We need even stronger growth. Stronger growth leads to higher living standards, less dependence on government support, and lower need for spending on entitlement and other programs. So how do we get there? We have a tax bill to maximize growth, to create jobs, and increase wages. This is not what we have just heard from many on the other side, trickle-down economics, or any other name that you want to call this. This is common sense economics, which I have yet to see be refuted by any mainstream economist. Increase the supply of capital in the economy and you expand the productivity of the economy. This result is more business investment, leading to worker productivity gains, workers who can then earn more, increase their after-tax income, and in the end, raise their living standards. Now, I want to turn to an essential sector of our national economy, agriculture, those who are responsible for feeding America and a troubled and hungry world. I am pleased, very pleased, that the bill reflects the importance of production agriculture to our economy. It is important to keep in mind that few other sectors of the economy face the multiple uncertainties of production agriculture. We're talking about weather, storms, fires, volatility in our global commodity prices, trade disputes, and transportation issues, and the list goes on. When we pass this bill, the agriculture industry will have a number of provisions in the tax code that recognize the uncertainty and the volatile nature of the income and expense associated with agriculture operations. These provisions, and we're talking about 34 or 35 of them, at last count, include accounting rules that allow farmers to manage their income and expenses. For example, in a year when our commodity prices are low, and yes, this year they are low, they can account for costs in a way that keeps them in operation. There are also specific inventory rules to help manage costs associated with the livestock and dairy operations, and to handle items needed for other basic operations, such as fertilizer and also crop treatments. There are unique rules for timber operations. Now, you want to get down into specifics and just how far we drill down to be of help to agriculture. Mr. President, even baby chickens have their own inventory rule, which, by the way, differs from the rules for ostriches and emus. I would imagine nobody would even think of drilling down to that extent. There are rules set for how to handle damaged crops and livestock disasters. They are certainly important as of today. I can tell you that these disaster rules provided a critical boost to ranchers in my state, enabling them to begin to recover from the devastating prairie fires in western Kansas earlier this year. Turning to the new provisions in the bill, we have developed it with agriculture in mind. And here I would be remiss not to mention the strong input and advice I have received on these matters from Senator Grassley, Senator Thune, Senator Scott, others, my colleagues who also share a strong interest in the agriculture economy. The bill, for example, liberalizes the depreciation rules for agriculture operations, giving farmers and ranchers 5-year property depreciation and permitting full expensing of plant and equipment purchases. The bill would greatly improve the ability of the agriculture community to use the cash method of accounting, which provides flexibility in managing cash flow, which is essential to providing certainty in operations. There are significant provisions in the legislation that establish a new income tax rate for pass-through organizations. Now, this is a very important issue, Mr. President, for the agriculture community. The majority of farms and ranchers are set up as pass-throughs, and most of the income earned by farmers flow through these structures. The bill also includes new rules for farmer cooperatives, which are a very important part of production agriculture. We've worked very hard to ensure that the benefits of cooperative farming are held whole in this tax reform plan. The bill also doubles the exemptions from the estate and gift taxes up to $22 million per couple. Now, I know this sounds like a lot to some of my colleagues, but for land-owning, cash-constrained farmers, they can hit this exemption amount very quickly, especially in my state of Kansas. And even when they do not, many farmers and ranchers spend thousands of dollars a year on lawyers and accountant fees to plan for the best way to pass their life's work on to their children, something very special in rural and small-town America. While I will continue to press for a permanent repeal of the death tax, for now let's modify it so we reduce its damaging reach. Finally, and above all, the legislation will provide farmers and ranchers with certainty during a very difficult time that we're going through. Certainty that they will be not taxed out of business in a down year. Certainty that they will have cash available to fund their own operations. Certainty that their hard-earned income farm or ranch will not have to be sold off just because someone has died. Certainty that the federal government recognizes their irreplaceable role in meeting the challenge of a very fractured and hungry world. So I'm very pleased, to say the least, that the Senate bill keeps the ag tax provisions, but will also help our farmers by creating a much more pro-growth tax system, lowering their tax burden and simplifying the tax provisions relating to the ag sector. Mr. President,